What's up, guys? Mike Sharp here. This is Sharp Investing, and I'm going to talk about PagSeguro, otherwise known as PagBank or PAGS. This is a very similar business to StoneCo, and I have just bought over the last 2 weeks about a 4% position. But I want to warn you, this is a trade. This is not a long-term position for me. So if you recall some of my other videos, I split my holdings up between long-term investments and trades, and so about 20% of my portfolio is trades, and those kind of can be anywhere from a day or a week to up to maybe a year. And so that's what this is. Just want to be really clear. But I am buying for 3 reasons. Part of it is valuation. So I am going to talk about the business a bit. And just kind of do a quick overview of the business for anybody who's interested in that side. And I'll do that next. The first bit I'm going to do is go over, I'm going to go over my reasons for buying. First one is, let's just get this one out of the way, technical. It is today, this is the 11th of December. It is coming down, it came down to hit support today at around $7, which is what it hit back in October last year or November 2023, and technical reason for that is a lot of buying tends to come in at support levels. For anybody who doesn't know about technical analysis, I think 2 main reasons that I believe. One is that investors who missed that, they go, oh, if the price ever gets back down there again, it was so cheap last time, I'm going to buy. So there's some buying that comes in from that source, and then also for people looking at charts. Support tends to be a place that holds. A low that is hit before and bounced off will tend to bounce off again. That's not guaranteed, but a lot of the time that becomes a self-fulfilling prophecy. People go, oh, the support levels hold, so they buy at that level, and it becomes a self-fulfilling prophecy. Now, if it breaks through, I will sell it, and it holds below 7, I'll probably get rid of it. But on the upside, I'm looking at a move to about 12.50, 13. There's a range here between 11.50 and about 14.50 that I think it can probably get back into. So I'm looking at about $5 on the upside and probably $1 on the downside. So this is about a 5-to-1 risk to reward. Now, probably the more interesting stuff is the next one is the exchange rate. Now, if we look at the Brazilian reais, about a year ago it was trading below 5 to the dollar, and now it's hit above 6 for the last few weeks. And I think this is that's a 20% depreciation over 1 year, which is crazy for currencies. Even for like South American historically weak currencies, that's still a huge move. And I think that is a huge reason why companies like StoneCo and PAGS have had their share prices decimated over that period, just because they're translating their earnings into US dollars, and that's a 20% headwind, right? So you've got to do better than 20% growth to be ahead, right, in terms of US dollar EPS or revenue, right? So the reason I think that this is going to turn around is because the central bank in Brazil has changed course, and instead of cutting interest rates, they're now raising rates. Now, this is bad on one level for companies like PAGS and StoneCo because the cost of capital is going up, and like in StoneCo, you'll see it in the financial expense line, and that would be the same in PAGS. But I think this is more of if the reais gets stronger, comes down on this chart here, gets down to 5.5 or even back to 5, we'll start to see those share prices really move. And there's a reason why I think that's going to happen now. Now, after today's close, I did buy some before the close today at 7, like just the low 7s, and put my average price around 760. But what I was reading was that the interest rate in Brazil was expected to go up by 75 to 100 basis points today. And either one of those is a massive move, right? So if you don't know about currencies, one of the big drivers behind currencies is relative interest rates, right? So if the interest rates are going up in one country and they're staying the same in the other or coming down, the country with the rates that are going up is going to strengthen because capital can get a better return by going to that country, theoretically, right? You can just buy Brazilian bonds, pay a lot better than US bonds, but it's more about the change, the rate of change, right? So if they're both going up, then it's, it should be a wash, all else being equal. Or if one's coming down and the other one's coming down more slowly, the one that's coming down more slowly will tend to strengthen. So I think, well, actually what happened after the close today was they went ahead with a 100 basis point hike and announced that they're going to raise it to 14.25 by March. So that's another, 2% move? So this is really bullish for the currency in Brazil, and I think we might have seen the bottom in the reais here. Could be wrong, obviously, but I think that we might have hit an inflection point here because the U.S. is still cutting rates. I don't think they'll cut very much longer, but at worst they'll just keep them steady, right? And so I do think that is going to be a major tailwind if I'm right here, and the reais starts strengthening against the dollar. That's going to be a big tailwind in the way that it was a huge headwind for the last year with these types of companies, Nubank included. So any company that's like listed in the U.S. that has earnings in Brazil but reports in U.S. dollars. Okay, so that's the second reason. The third reason is that, just from a valuation standpoint and from a company's perspective, it's pretty cheap. So I think if we start at earnings, where are they? So the earnings for the quarter were 178 reais, which translates to about 30 cents US. And then for 9 months this year, it's 509, and that translates to 85 cents US. Now, if they have a third or a fourth quarter that's the same as the third quarter, we're gonna see about $1.15 US in earnings, and that's versus a $7.10 share price for the stock. You can do the easy math, that's just over 6 times price earnings. And if we go back here, we look at their earnings are actually up 33% year over year, or 6% quarter over quarter. So you're getting a more than 30% growth rate for 6 times earnings. Now, if you do the math on the PEG ratio, that's really strong. That's like below a 0.2 PEG ratio. Now, if you look forward, the analysts are not projecting that the earnings are going to keep growing like this. They're projecting like 9% growth for the next year. I don't know if I really believe the analysts. I haven't done a huge amount of work on PAGS, but my guess is that it's going to be higher than that. But if it does slow down to 9%, you could see that these sort of low PE ratios might become the norm, right? Because you do have that looming risk of the currency devaluation. And if you're only growing at 7, 8, 9, 10%, and you've got a 5% currency headwind, then it becomes a slow growing business with a risk attached and maybe doesn't have the juice that it would need to command a higher multiple. But anyway, for now, the results look really good. And why don't I go through some of these slides here just to talk about the business a bit. Actually, I should talk about the relationship, not the relationship, but like the comparison between PAGS and StoneCo. So StoneCo I cover on this channel, as some of you probably know. I cover it pretty closely, and this is a very similar business. It's almost the same, actually. So they're a payments provider for merchants in Brazil, and they have expanded into credit products and banking, and now they're actually called PagBank. Because they're actually a little bit ahead of where StoneCo is in terms of their transition into banking, right? So they've been doing this a bit longer than StoneCo has. As StoneCo, they basically stopped their credit product for 2 years because it blew up and almost sunk the company. Whereas PAGS has been doing that consistently throughout that period. They did pull back on their lending a bit, but they didn't totally pull it. And they're back in the game now and actually looking pretty, what did I say there? Anyway, they're doing quite well. The difference between the two companies is that they, PAGS at the beginning had focused on a different segment of the market. So PAGS focused on micro merchants, right? So this is just like somebody in a market selling fruits or whatever, and they take payments on their phone. But then you've got StoneCo that actually focused on sort of the bigger businesses, not big businesses, but small, medium-sized businesses, and they kind of split the market that way. The last 2 years, they've sort of been encroaching on each other's territory. StoneCo moved into micro merchants more. They found they didn't like that segment too much, and then PAGS has moved into bigger businesses because I think they see the economics are better there, which I tend to agree with. But they've also moved into large businesses, which StoneCo says they don't want to work with. So they're slightly different. But I think the other thing that's going on too that's the same for both is basically the land grab is over. We had a situation in Brazil where there was millions of underserved merchants that didn't have the processing that they needed because the banks in Brazil were they didn't care, right? Because they didn't have any competition, so they just underserved the market. And then there was this land grab, and everyone was just scooping up customers as quickly as they could. And I think that portion of that part of history is over now. You're seeing the growth rates slow down pretty dramatically in both of the companies, and also you have Nubank that's coming in and trying to eat part of the business, right? They're eating part of the lending side, or they're trying to absorb that area that these two companies are growing into. And then you have Mercado Libre that's probably the more dangerous competitor on the other side. They can offer things that none of them can, where they can connect, their payments and their stores with online shops at Mercado Libre and all this kind of stuff. So that's, I would say long term, I would watch out for those two. They probably have more robust businesses, and PAGS and Stone may or may not be long-term businesses, depending on how sticky these products turn out to be and how well they're able to fend off the competition. But let's look at the highlights from PAGS. Quarter three, like I said, good quarter. They are up to 32 million clients. Now that's way more than StoneCo, and that's because there's a lot of micro merchants in there, which StoneCo doesn't have as the bulk. 6.2% year over year. That's not like I said, that's a pretty slow growth rate. 1.4% quarter over quarter. There is some churn in there, right? So they're losing micro merchants and replacing them with bigger merchants. So maybe these numbers aren't the best to use because, as we'll see, there's some other stuff growing pretty strongly under the hood here. So payment volume's way up, almost 37% year over year, not 10% quarter over quarter. Looking really good on the payment side. I'll show you why in a minute. Deposits year over year look great. They've hit a bit of a roadblock here in this quarter, but I don't think they're done growing their deposit book, especially with interest rates going up. You'll see more. You'll probably see more people saving money as the rates go up, because that tends to be how it works. Credit portfolio growing pretty well, 30% year over year, 10% quarter over quarter, and like I said, they're ahead of StoneCo. These growth rates don't look as good as StoneCo's, but their book is much bigger, right? So they're up to 3.2 billion now. So it's harder to grow the book quickly when you get to bigger sizes. So that's the reason why the growth rates look lower, but they're very healthy and looking really strong there. If I scroll down, so if we look at the operational slides here, what I wanted to point out was the payment volume breakdown, right? So you've got, this is medium, small, and micro businesses. They've got 88 million in TPV, which is up 26%. That looks really good, right? Up 6% quarter over quarter. But this is large large merchants, right? That they're trying to focus on and getting away from the smaller end of the scale. can see this segment is growing really fast, 62%. So they're doing a good job of expanding into the bigger players, which, you know, if they're able to cross-sell their banking and credit products, these could be big drivers of growth into the future if they're able to keep up getting this level of traction. So that's great. Banking looking really good. Like I said, the cash in here is up 49% and up 10% quarter over quarter. So that looks really good. Now, if we go into the portfolio breakdown, you can see in secured products are really growing quickly. So they're making a strategic move away from unsecured lending, which is good for the business. This is, if you're an investor, you like seeing this because there's less risk on the books. And the secured side gone 1.5 to 2.7 billion year over year. That is looking really strong, slowing down a bit quarter over quarter, but that's still really good. And like I said, cutting their unsecured lending in half. Most of that secured lending is the payroll loans, right? So that's them making deals with big employers where they can forward payday loans to clients and then collect the money directly from the employer. So that's an area that they are in competition with Nubank in, because I know Nubank is expanding in this area as well. So we'll see how that progresses. Credit card lending coming down a little bit, which is interesting because that's where StoneCo is actually growing in that area. And also working capital loans, again, that's where StoneCo is growing. So they're not quite competing on these fronts. It looks like they're almost getting out of working capital loans as well because there's hardly anything left in the book. So that's an interesting difference. I'm going to skip that one. Maybe we'll just go down to revenue. So the revenue for the quarter, like this is, or for the year, I guess, year over year, 20% growth. That looks good, right? 20% growth. But if you match that with the 20% devaluation in the currency, they've had zero net revenue growth or zero revenue growth in US dollar terms. So that's why I was saying the currency has really hurt them in the stock market. So if we see, like again, if we see an improvement in the reais exchange rate, that's going to turn into a tailwind, and it could really put some rocket fuel under the stock. Maybe that's what I'm betting on. Okay, so breakdown too, as you can see, there's still 90% in payments. That's where 90% of the revenue comes from. Only 10% from banking. That's all the credit and all that stuff in there, and deposit. And deposits. But if you look at the gross profit, the payment gross margin is 36%. It actually came down a little bit from last year and from last quarter, but still like high 30s. But if you compare that with banking, it's almost twice as profitable in terms of margin. Now that's because the accounting for banking interest is different, but you can see that it's not a straight revenue growth calculation, right? Any revenue growth is going to, a lot of it's dropping to the bottom line here. Like we said, banking actually, accounts for 18% of the gross profit as opposed to just the 10% of revenue. So that all said, I think PAGS looks pretty good at this level. I was willing to take a bet on it. Like I said, $5 on the upside potential kind of thing versus $1 on the downside, 5 to 1. And I think there's probably a pretty high % chance that $5 is going to materialize. So if you did the expectation calculation, I think it looks pretty good on paper. I might get it wrong though. I don't win all of these, but I think this kind of bet, I'll take this bet every day. But yeah, interesting to see how the market opens tomorrow with the new rise in interest rates in Brazil. And yeah, I hope you made it this far. And if you did, thanks for watching, and I'll catch you in the next video.